Hello everyone, I'm Trace by Ibra. Welcome back to the Quiet Trader series. This is episode 3 in playlist 1. So briefly, I can talk about the previous session that we had, which was episode 2. We last talked about the accumulation, manipulation, distribution, and I had said that we're going to have more in this episode. So let us see. Before we drop there, this is episode 3, that is the question. Trading session explained and why it's the New York session mostly. We're going to see that. Okay, we can't just jump on to the New York session because it is the mostly valued or it's the session we want to trade in. Let us have something onto these other two sessions. We are going to talk on Asia, small, then on London, then to get New York session. Now, the time we listed here, see a time of the opening and the closing of the sessions. For that, you can do research when Asia opens and closes and when London opens and closes. But this time, njagala, when you do your back testing, every time, joba or focusing ako. Because time when all the time you're seeing here, it is the silver bullet or kill zones time. Yes, time is important because that is the factor. You need to know exactly where are you going to, and you're going to do something at the right time when you're supposed to be doing it. So time is important. That's why it's time and price. So what your time when you're doing your back testing, you're going to need this time, because government will back testing on the all day. You're going to find a lot of favor lookups, but that doesn't mean consistency. Consistency, you must be having something in a time frame. That I go to the marketplace from 8:30 to 12. That's the time I'm looking for a trade setup. If I haven't found any trade by 11:30, I'm gonna stop because the 12 is gonna be noon, and according to the day, with experience, you're gonna be having that, and that comes with experience. I can't just tell it to you, and you're gonna be like we're gonna chief now like that. So you're gonna do your back testing and see how price moves onto these times. So with that said, so in the previous video, when you get on accumulation, manipulation, distribution. Now, where does this happen in a trading day? Like to me, I wanna use this on a daily. Why daily? Does this only happen on a daily? So every candle, let it be daily, let it be weekly, let it be 3 minute, let it be 4 hour. It has accumulation, manipulation, distribution, right? But since is on a higher time frame, or twandiyagadde okuba nga having this on a higher time frame such that we go lower to find setup. So gobanga osobola 3 minute as a higher time frame to find something ekigenda okukuleetera okufinding a trade on lower time frame, then that's impossible. So probably tugenda kuba tutunuulira 4 hour daily, then the weekly. 1 hour is also a hard time frame, but most tutunuulira 4 hour daily. So I wanna focus more on daily because that's where I wanna see this. Because accumulation, manipulation, hard time frame, dropping lower and finding setups, that makes sense. So how does this happen? Bullish structure, right? So we have the opening price, we have it there. So we create the low. I think candles I showed them in the previous episode. Let us have it more here. We have the low created, then the rally on a bullish structure. This was there in episode 1. That when we buy, we want to see price moving higher. That is a bullish structure. Then we create high, then price closes, right? So you're going to have a body like this with a candle, because these are bar. So we create the low, we get the open, the low, the high, then the close. That is a bullish structure. Now this is a candle of a bullish structure. Then how about for the bearish? For the bearish, you're going to have an opening price here. We'll create a high, we'll create the low, then the close there. You're gonna have something like this. A body, you have a high and a low. right? Open high, dumps it lower, creates a low, then closes. That's for a bearish structure. So let us have something structural, bullish structure, right? So you can see now we are going into more details. No more just sticks. The value just will stick. Now this could look like a diagram. So we're having accumulation there, then we have the manipulation there, then we have the distribution there. Now we want to see session zijiramu wano. Mu Asia session tuba twagala kulaba accumulation, then mu London tulabe manipulation, then mu New York session tulabe distribution ne redistribution, right? That is a bullish structure. I think now we are not that much far from where I want us to be. So we have the opening price. We have the opening price mostly during the accumulation. Then the candle rallies. It closes there. That's where I have the open, creates a wick, they are down, then it rallies, creates a high, then it closes. How about a bearish structure? So the same thing. Let us not delay this. Just the same thing. Just vice versa. So we have the accumulation, manipulation, could be taken out by side liquidity, then it distributes in New York session or does the redistribution in the New York session, then we create the low, then we close, right? So that is for a bearish structure. Okay, I want to see this on a 15 time frame when this is a daily candle, right? We're going to have that on a real chart. So with that said, we're going to look onto the elements of interbank price delivery algorithm. What is interbank? Interbank are big institutions. Now, they have elements that move, or that those elements zinga moving. So you know they're moving, but they are elements of price delivery on how price moves. Price is moving onto those 4 elements. It is an algorithm. It is algorithmic. Price action is algorithmic. Nothing comes in randomly. Everything is done as it is coded to be done, right? Okay, how does it tijja kitya ku accumulation, manipulation and distribution? Because tulabye oli accumulation, manipulation and distribution. Now kikwatagana kitya? Interbank price delivery algorithm ekwatagana ekya interbank price delivery algorithm. So the question could be, who is accumulating and what are they accumulating? Then they manipulate for what reason? Later ne bakola distribution. How does that occur? It has a system and it's called algorithm, or it's called algorithm. Okay, price delivery ina elements nya twagala tuzirabe. Those are the 4 elements of price delivery or interbank price delivery algorithm. The market consolidates, it reverses, it does retracement, then nemane kola expansion, right? So 4 elements zino eno tezikola nga olaba arrow buno ebutambula wokka, but it can move from consolidation to expansion. Never more expansion, nedda mu retracement. So kuva mu retracement nedda mu expansion. So it's not that it's always gonna be like this. No. Okay. The interbank accumulates position in consolidation. Interbank yagala nnyo interlinga position. Accumulating is like executing positions into consolidation. Now interbank yagala nnyo going into the marketplace, buying or selling or executing during the consolidation time. Those are the interbank. Like that is a footmark, or it is a footprint of interbank taking positions in consolidation, right? Okay, the diagram cycle is how price action moves. Price action is moving out with these 4 elements, moving on to these 4 elements. It's not always like that, but it moves from one structure to another, but not identical in the diagram. Tefanagana wait always, but not randomly. Moving randomly. Nega kati mvudde mu expansion because ngeze mu consolidation. No, does not move randomly. It moves with that algorithm. right? The market moves seeking and yielding liquidity, nothing else. It moves, that means it is expanding to take out liquidity or to engineer it, then later takes it out. That's what the market is doing. It is moving into the expansion to create liquidity. If it creates it, then later it's gonna come back and take that liquidity out. So that's how the market moves. Okay, we're having a chart here. It's gonna be Nasdaq 100, and it is a daily chart. You can see here it's a daily chart. So how did this candle close? This candle, how did it come from the open to the low to the high to the close? I think I'm not taking you that much fast. I think from 0 to 2 to 3 to 1. Sina chinskipinze. Okay, with that said, you can see that this candle opened, created a low, created a high, then closes. How did it, now this is daily, how did it end up like this? You think it doesn't have more candles inside it because it is daily? So if you drop to 15 here, that candle has more candles inside it because now it's the lower time frame, right? That's how a candle is formed. That's why we like to do analysis kwa high time frame ya wagulu, because mundamu yo mbamu lower, mundamu yo, or in a day we have lower time frames, and those lower time frames is where we find an execution. But having done the analysis on a high time frame, which was a daily, then you go to 4, just like that. So that's it. Okay, this was Sunday. This is the Monday's opening. Monday, we have the New York net open kusawa mukaga, which is 00 here. So the Asia etandika kuze sawa 20 sawa 2 to 2 here. It's all midnight. London is all midnight. New York here really nicely traded. You can see that. So we have the accumulation, the manipulation, then the distribution. You can see that. The accumulation here, consolidation, then we take out that buy side, then drops, take out the sell side into this gap, then it rallies to the buy side or to the willing buyers at higher price, which is buy side liquidity. Okay, that's how that candle was formed. We are going to have more details. So okay, how did this candle form here? Now this is a daily chart again. Then we drop on a lower time frame. You're gonna see into this candle. Lower time frame is here. That's why it's good to do analysis ko high time frame ya wagulu, then on lower time frame not finding entries. So how was that kind of formed? Just like this. You have the opening price, which was here. We created a high. Now remember, iri candle eriemu zino candle ziri nyingi. That's why it is good to do high time frame analysis. Now to know the same candles, you have those weak body, wachirabanti. Every candle has manipulation, distribution, the low and the close, or the high, yes, the low and the close. So that's why it's good to do high time frame analysis. You come on these lower time frames, not finding an entry, because if you trade on high time frames, entries zigina kuba hard to come to, ugina kuba olinda nnyo. But if you use this lower time frame, it is really easy to be an intraday trader. With that said, you can see that we have the accumulation in here. You can see now the structure is not always identical, because price has an algorithm it moves in. It's not everything that you are identical. But if you do back testing, you see that most of the times you get manipulation in London. Now if you did get manipulation in London and you got relative highs, just as with your experience, you will know that these relative highs will be taken out, because that is engineered liquidity, buy side liquidity. Later in the New York session, we took out that, then we went downwards. So structures zona zetulaba, they are not always identical, or what is zigena kubanga zibera always like that. That's why I want you, if you're here, and you find something useful, take your time ukole backtesting on the times that zentistinze in the first slide. Only that time you will see how the market, with experience, you will learn to find a zero different structure and you will learn how to use them. Okay, that said, that's how this candle formed, right? So let us see another candle. So this is a daily candle also. Now tufunyeyo candle ili neutral, sinene ngeno, but it is really kano wakaita week. This is a week. Kana kalinga kati, it is like a tail, it is a week. Okay, in this week wano kali kati ninyo, but on lower time frames kuliko candle like there are candles. You can see that candle you're going to tunulirako next. So here, so that week on a daily, it has candles on a 15. That means this is how you can trade, and that's why it's good to have entries on lower time frame and doing analysis on higher time frame. So we have the accumulation here, then you can see that you did get that manipulation in London, but with experience doing your back testing, you'll understand when to wait and when to do nothing. But you can see how the New York trades. The New York really gives that much impact, moving aggressively, moving nicely into the direction you were anticipating to see price going. Okay, now how did this candle come up? Like we wanna look more. Okay, it is the same. If you're watching this, I want you to be looking onto the daily time frame on the time here and on the lower time frame. Nothing is edited. This is a trading view chart. So with that said, it is still the same day Friday with that indecisive candle in a weekend panvu. So with that said, okay, we're having the opening price here. You can see Friday 00 there. So this is Asia, this is London, this is the New York. Okay, with that said, then we have the opening price here. Opening price is there. So the candle was once black, since my bearish candle are black and the bullish candle are green. So at the daily time frame, this candle opened, traded lower, it was bold black on a daily time frame, just like this. We got a low. When we got a low, this candle moved up again, created a high in the New York session there. We created a high. Creating a high, we need to close. We closed from there. We got a close there. When you got a close from there, you can see that this was the Sunday opening is here. So meaning Friday closed there, right? Okay, let us have more details on how it could look after it has been printed. We have the opening price there. Opening price. Price went low, created a low there. There. Then it moved up again. It created a wick. That's how a wick is created. Once it moved down, once it prints that price on this level, it leaves a wick. Since it hasn't been closed, it moves up again, up above the opening price, right? It creates a high there. We saw that. When it creates a high, it hasn't closed. It comes back from creating the high, it comes back to that price, creates what? The closing price. That's why we have that candle looking like this on a daily time frame. Like that's how a daily candle is formed. But when we drop on a 15 time frame or a lower time frame, we have these candles, and that's the structure we could want to see on a bullish anticipated expansion day, right? Open, low, high, and close. So this is a daily candle, or this is how a daily candle should look. But when we drop to 15, it's gonna be looking like this. But why the New York session matters, or why does that session matters mostly, you can see how it trades. You can compare and see the Asia and the London. Where do we get the most distribution? Because fanatomatic distribution kitegeeza ku distributing. What are they distributing? They are distributing their positions. Who are distributing? The interbank, the institution are distributing their position to willing buyers, to willing buyers that are buying at a higher price, and that is buy side liquidity. I think I talked that in the first episode. They're selling back to the old highs. They are buying it at a higher price after buying it at a lower price down here. Let us have more examples. So this was a bearish day, down close candle. Let us go first. This is 13th November. So the same day, 13th November. You can see that there wasn't no manipulation in here, but the New York really moved to the downside. So with experience, with the backtesting, you're going to understand that with the structure that I showed you, that we're going to have manipulation in here. Yes, that is the structure. Like, that is the structure. Everyone is going to teach that, or everyone again, but not always price is going to be like that, right? So with the backtesting, you're going to get experience, and you're going to know when price won't come back to these highs, and you know when not to do nothing, like with experience. So having the Asia, the London, I mark the same and nothing changed down here. Then I just picking randomly. I mark the time that I should be marking, and this is most of the time we're marking things on my chart when I'm trading. So when you're having a New York, you can see how New York moved. It moved really nice. They're moving at the new singers, sessions. So another day here. This is Thursday, 26th November. You can see nothing changed. You can see that we got the manipulation in the New York session, taking out Asia and London highs. That we want to see that on a bearish day. Market really moved it downwards. At what time? At 9:30. Sorry, at 8:30. Time Jembalaze on a first chart. Sorry, on the first slide, we saw 8:30 there. 8:30 took out that. Then we started to drop. So another chart here. Time is the same. Nothing's changed. New York session really. This is why New York session matters. You can compare the Asia, the London, the New York is really moving nicely. I think that's gonna be it for this episode, and we're gonna be having the last episode, which is gonna be episode 4, and let us catch back in that episode where we're gonna be talking on how a trader should be thinking, like that mindset you should develop while you're doing your backtesting, and what you need to understand as someone starting. So I'm Trace Vibra, and let us catch back in that episode when you're going to the next playlist, which is gonna be really good. That's it for this episode. Thank you all.